Welcome back everyone to the learning video series for traders. So today's topic is breakout trading. So this is part 2 of breakout trading. If you have still not watched the part 1 of the breakout trading and process to read candlestick charts, the link is available in the description. So in the last video, we have discussed about before breakout trading. This is a mini flow chart which I have developed for before breakout trading. So in this section, we'll discuss about after breakout, what we need to do and what are all the primary information we need to look before taking or once we enter trades. So in after breakout, first of all, what is after breakout? What happens after breakout? So these are the patterns where which it gets developed after breakout. There are four basic possibilities. So this is the breakout which is getting developed. Once price crosses the breakout range, it straight away moves up. Okay, slowly, steadily, it straight away move towards upside. This is one possibility. Next, this is second possibility is once price makes a breakout, it gives a small pullback. This is called as pullback, and then price moves in the ultimate direction of the breakout. So third possibility is once price makes a breakout, it goes into a sideways mode and then price moves in the same direction of the breakout. In this case, the direction is towards upside. So fourth possibility is again same, 1 and 4 are same. Once price makes a breakout without any further either pullback or sideways option, no, nothing gets developed, straight away slowly steadily price moves towards upside. These are some of the basic possibilities takes place after breakout. Okay, so let's go back to the flow chart again. So once price makes a breakout, there are few basic parameters which we need to look. First is the follow through, direct follow through. That is, once is it price is in a sideways mode, it makes a breakout, it straight away moves up. This is called as direct follow through on the direction of breakout. In this case, the breakout is towards upside, so on the direction of breakout, whether we get a direct follow through. Same rule applies for a downside breakout also. Once price making a breakout, it continues. This continuation of the price in the same direction is called as follow through. Okay. Second, if we are not getting a direct follow through, next we need to look at a pullback follow through. That is very simple. Once price is in a sideways mode, once price makes a breakout, we will get a small pullback and then price gives us a follow through again on the same direction. This is called as pullback follow through. Next is the price action which is getting developed. Price action, especially in this case, we need to look at two different phases of price action. One, when price is inside this sideways balance, we need to look at the price action. Two, once price makes a breakout and start moving towards upside, we need to look at the price action which is getting developed. Okay, let's look at an example before continuing this flow chart. Here we are, price is in a, the time frame is hourly time frame. Okay, the stock is HDFC Finance. So look at this. This is the breakout tight range which is getting developed here, and we are getting a breakout at this point. So very important is once price making a breakout. This is the breakout candle which is getting developed. So before price making a breakout, we need to look at the price action which is getting developed inside this balanced auction. So let's first look at the price action. This is the same flow chart I am showing again. Very important is this price action is very important. Okay. So first, what auction is getting developed? When price is slowly moving towards downside, and always remember when price is in a tight range, volumes probably will be low. Okay, more possible. Look at this, low volume development continuously, the volumes are low. This is a basic natural or I can say an obvious activity with low volume, but very important is price is moving towards downside. We are getting a rejection for the first time from the buyers and price is moving up. Again a down move, again price is rejecting. Continuously buyers are rejecting two times. Same way, this was the first rejection from the sellers, and for the second time price rejected. Again when price went up, third time price rejected. This time remember, when again price came down, it has not tested this lower zone of this balanced auction. It has not got tested, but remember what we got is this exhaustion. Generally, now what is mean by exhaustion? Very simple. At the same price level, price continuously stops multiple times and price get reversed. This is in a simplest form of explanation for an exhaustion. So this is what exhaustion is getting developed. Now remember, if the sellers were stronger at this point, when the third time when the rejection was coming in from the sellers, if the sellers were really stronger, they should have tested this lower zone to look forward for the buyers. But what happened here is we got an exhaustion at this point, and this time whenever, now look at the volume development from current exhaustion zone. So this is the exhaustion zone which is getting developed. From this point, very important, we need to look at the volumes. Whenever price is moving towards downside, volumes are very low. Look at this, whenever price is moving towards downside, volumes are very low when compared to at this point when price is slowly moving towards upside. Look at the volumes increase in the volume. A basic price action rule is when price is moving up and volumes are also increasing, this is a sign of strength. Okay, but I am not uh, I'm not giving an information stating that if price moves and volume is up, definitely the stock price has to move up. Definitely no. Let's compare different parameters here. First of all, the third attempt from the sellers when price came down, we got an exhaustion. We have got an exhaustion at this price level. Multiple attempt. Look at this. 1, 2 and 3. 3 continuous attempt. Price has failed to move, make a downside follow through. This is what now we are using a term, the follow through. Downside follow through is failing, and price slowly started moving towards upside. So at this point when price is moving towards upside, look at the, as I mentioned, the volumes are also gradually increasing. Very important is we need to look at the candle of the breakout. At the point of breakout, what is the candle? So closely monitor. This is the breakout candle which is getting developed. This is a bullish candle, bullish breakout candle. Now closely look at the volumes also. Volumes are good. Volumes are gradually increasing towards upside, and now there are many possibilities that the breakout can end up being a failure. There are many possibilities this breakout can end up being a failure. So how to get rid of the failed breakout? Very simple is to read this, read the price action which I have done now. Okay, we are getting an exhaustion and the breakout candle is also bullish candle. So these are the two conditions. Possibility of chances of failed breakout will be low. And now the next very important aspect which we need to look at is, this is the breakout candle I. Very important is the next candle or any upcoming candle has to cross this breakout candle I and price need to spend more time above it. that then we can confirm this as a chances are less that this breakout will get failed and we will get an upside follow through. So look at this, price is clearly moving towards upside. Now what we are getting is an upside follow through. Next is, what is the price action when this stock price is moving towards the side of breakout, that is in this case an upside direction. Now we need to look at the price action. What is happening here is price is slowly steadily moving towards upside. Look at the trend which is getting developed, that is this is the low and we are getting an continuous higher low formation. Look at this, this is the low and we are getting an higher low formation, and parallelly we are also getting an higher high formation in continuous upcoming candle. We are getting an higher low and an higher high formation, and when we are getting this first dip, we are getting a first small dip here. Look at the volumes are dropping and again buyers are dominating, and when price is again in a sideways mode, again the volumes are low and again buyers are dominating and pushing the price towards upside. Probably from this point of breakout, the stock price has easily moved 150 points an upside move in just a span of 1 to 2 trading session. Okay, so these are the few parameters and one example. So all this breakout, before even planning for this breakout, we need to look at the broader trend on the time frame whichever you are getting a breakout. So in this case, this is an hourly time frame chart. So what is the trend? Even looking at breakout, analyzing the price action, taking trades, that is secondary. First is the trend. On the same time frame, I have zoomed out the chart. So look, this is the breakout which we were discussing and price has moved towards upside. But before that, on the same time frame, what is the trend? It is a clean uptrending auction. There is no major drop we are getting in. So this is a clean uptrending direction. So always what I suggest is, most cases try to take trades on the breakout direction which is in favor of trend. If the trend is towards upside and we are getting a breakout towards upside with which an exhaustion getting developed, and also the candle which is bullish and price is crossing the breakout candle. The candle is bullish, price is crossing the breakout candle and continuously price moving towards upside with higher lows and higher high formation. Everything is in our favor and volumes are also increasing. Everything is in favor of the trend, that is bullish, or I can say an uptrend. So very important, don't miss to check the trend. Let's look at one more example. This is, I'm just going more and more shorter time frame trend now. So last example we have looked at the hourly time frame. Now let's look at a 30-minute time frame trend. So this is 30-minute time frame trend. So stock is Tata Steel. So this is the breakout level which I have marked here. Now interesting here is, breakout has taken place, all the condition, the trend is up. Look at this, I'm showing this is a daily time frame and the trend is clearly towards upside. There is nothing to worry, the trend is clearly towards upside. Now closely look at what parameters which we need to look. This is the first time sellers rejected and price came down and we are getting a kind of a V-shaped recovery. So this V-shaped recovery tells us that the buyers are showing some kind of aggressiveness. Always remember, recovery or reversal, this is, I can call this as a reversal also. Generally reversal are of two shapes. Okay, I'm not big fan of any shapes or pattern, but just for a knowledge purpose, there is one called V-shaped recovery Same on the downside. Other is called as a U-shape recovery. Same upside and same downside. Always remember, V-shape recovery tells us the opposite side traders are also aggressive. Same case. So this is the sellers who have pushed the price towards downside and we are getting a V-shape recovery. This tells us the buyers are also aggressively pushing the price towards upside. Very important. V-shaped recovery, we are seeing it. Now we need to look at the follow through of it. Before even looking at breakout, we need to look at this V-shaped follow through, because buyers have aggressively pushed price towards upside. Whether they are giving us an follow through is very important. There are two possibilities again. V-shaped recovery, then price will be in a sideways and then price will make a breakout. Or some cases V-shaped recovery, sideways auction will be very less and price will continue towards upside. So this is the first example which we are getting here is same a V-shaped recovery and then price is in a sideways mode, and slowly when price moving towards upside and retesting this breakout level, or I can call it as a swing high in a 30-minute shorter time frame. Okay, so swing high breakout is getting developed here. Very important, closely look at this. When price, this is the breakout candle which is getting developed here. The green color candle which you could see is the breakout candle, and let me quickly draw the same candle here, a bullish candle which is getting developed again. A bullish candle is getting developed with, now look at the volumes. Volumes are rising, and next on an uptrending move, what we probably get is an higher lows and an higher high formation. So now what we are getting is price is moving up, a small pullback, again an upside move, again a pullback, again an upside move. Look at this. This is the low, higher low formation, higher low formation, and an higher high formation, continuously higher high formation. So this V-shaped recovery, aggressive buyers are slowly steadily pushing the stock price towards upside with an higher high and higher low. So this is favoring buyers. Okay, so next, once price makes a breakout, one basic parameters which I have shared is price, let price cross above the breakout candle high, then plan for the trades, okay, as per your convenience. So in this video, I am not going to share any precise trade entry or exit. Let's focus on the process first. Okay, this is the above this breakout candle high. Probably we can plan for the breakout based buy trade. So what is happening? Next candle is crossing above it and price is again coming inside the range. So what happens here? This is where mind need to be stable enough. Once price crossing the eye of the candle and immediately price slowly moving towards downside, don't get panic, just relax, look at the price action. Volumes are moving down. Always remember, when price is coming down and volumes are also coming down, this sell off is a kind of a weaker sell off. Okay, so now what is happening here is, let's assume you have taken a buy trade above this breakout candle because everything is favoring on the side of buyers. Let's assume I have taken an entry above this breakout candle, a buy side entry. Now once you take an entry, we need to look at two things. One is the follow through, next is the price action on this follow through. But what happened here is, once I have taken an entry, price reversed back, and what I could see is volumes are low and slowly price is going into a sideways auction. If these sellers were really stronger, they should have made a downside follow through. But no, price went into a sideways mode, and then look at this. Quick, clean, continuous up move. Quick, clean, continuous up move with higher lows and higher high continuously on every continuous candle. Probably we are getting higher highs and higher lows. So the breakout based trade entry after reading the price action. Now one thing which I have not mentioned here is the exhaustion. The exhaustion which we have got here. This is the exhaustion. Multiple attempts, all the attempts failed to push price downside. Again an attempt, again price failed to push price. Again sellers failed to push the price towards downside. Multiple attempt, exhaustion also even before the breakout. And one more time, look at this. Once price moves, makes a breakout and reverses back, again an immediate exhaustion is getting developed. And if you look at the volumes here, volumes are very low. Look at this. Same volumes are very low when compared to the relative volume or the previous volume. When compared to it, volumes are very low. If and the sellers are also not showing any strength to push the price towards downside. So if you are not getting panic at this small down move, you are getting a reward of a clean clear upside move. The stock price went up probably 8%. If I am not wrong, the stock price moved 50 points. It has moved more than 50 points, probably 7 to 8% of upside move on in a trading span of one single day. Okay. If you are not panicked, then it is your reward. Because try to understand, everything is in favor of buyers. A V-shaped recovery from the buyers and market went into a sideways mode. We have also got an exhaustion here, and slowly steadily price is moving towards upside. When price makes a breakout, the candle formation is bullish and volumes are also increasing, and price crosses above the breakout candle. Even if you have taken an entry, even let's assume I have taken a buy entry there and price reversed back, but when price is reversing towards downside, volumes were low and price went into a sideways mode with further low volumes, and there was no downside follow through. Already things are favoring, the auction is favoring to in favor of buyers, and this small down move was just to remove the weaker hand traders, and then price clearly moved towards upside. Let's look at one more stock, this time more shorter time frame. Let's go more shorter time frame, that is a 5-minute time frame. So this is a 5-minute time frame which we are getting here, and now this is the range, a tight range in a 5-minute time frame, and generally balanced auction as low volumes. That is very obvious, nothing more to get. And this time there is two breakouts. First, we are getting an upside breakout. One first basic rule is let price cross above the breakout candle high, then you can decide or a plan for a trades. In this case, the breakout is up, so we can plan later a buy side trade. But now what is happening here is, so this is the breakout candle high, price has not crossed and again it reversed back, and this time price made a breakout towards downside. Okay, price made a breakout towards downside. very important is this time what is happening here is there are two possibilities getting developed. So below this breakout candle low, always remember once you are going more and more shorter time frame, different scenario get played out. Okay, so let's assume below this breakout candle low, I have taken a short side trade. Okay, so what is happening as the time frame get reduced? So this is 5-minute time frame. Different possibilities, different scenario gets played out in a breakout. That is, in this case, price is into a balanced sideways auction below this range, below this breakout range, and when price again moving towards downside, a small pullback and price is rejecting. This pullback is just to shake out or remove weaker hand traders. The scenario which I have discussed in the start of the session is price making a breakout, a pullback, and then a breakout. Always remember this pullback and price is making a breakout on towards same direction. It the momentum, the movement of this downside move, more the chance it can be faster, stronger. Okay, now look at this, how fast it was and how strong it was. Price making a breakout, sideways auction, a pullback towards upside, and then a down move. Now look at this. A downtrending rule is very simple: lower high formation and a lower low. What is happening? Every single candle, lower high and lower low, lower high and lower low. And look at the increase in volume. Volumes are huge with the increase in volume when compared to the previous relative volume. So generally 5-minute time frame are used for an intraday trading. So generally intraday trading, what we got here is this stock is Reliance. So we have almost price came down 40 to 50 points on an intraday basis. Generally on an intraday basis we are getting probably 2.5 to 3% of a stock momentum. That is not at all a bad deal.